It's Thursday, August the 25th. Tomorrow is National Dog Day for all of you dog lovers. I think I read a stat that almost 60% of households own at least one dog.
We do. You do. Our office does.
Everyone in our office except
I don't
for
think Jess does. She did at one
she,
point.
she, I think she, that's right. That's
Yeah.
correct.
Yeah. So, but we have dogs here. If you don't know, you could come by
It's a
and
very dog-friendly
you
office.
could do that. I had the most interesting morning in preparation for the show. Gib and I, we prepare all week long, but my last piece of preparation, I like to get up early in the morning and watch the lead in to Squawkbox, and then I like to watch Squawkbox
It's a CNBC show, by the way.
right. And Jackson Hole's going on this week, and so Steve Leisman, who is he probably would say not only a reporter, but he tends to be more of an economist, which he was doing an interview with the Kansas City Fed President Esther George. Really interesting. And I actually got her notes here, so if you allow me to look down and tell you what she was saying, it represents really what we think, the Q&A that was going on, what we think, and I thought it would be helpful, and then we'll add our input on it. She was asked, what's the state of the economy right now? And she says the Fed focus primarily right now is the focus on the imbalance between supply and demand. And that's their focus, supply and demand, and trying to get those two in balance to get the economy back to where they want it to be. She was asked the question, when will we see the economy begin to turn around and inflation go down? And a very quick answer was, I'm not sure. And I found that interesting.
Refreshing.
And found it refreshing.
Yeah.
That she doesn't know, which indicates that the Fed doesn't know. I mean, she's a voting member of the Fed, so she doesn't know. He then asked, will we see any significant changes in inflation? And her response was, when you will know that inflation, we're getting hold of it when we see 3 consecutive months of inflation coming down. Now, let's go back to July. July was at 9.1. August went to 8.5. There's 1 month. So she's looking for 3 consecutive months, which would indicate to her that things are beginning to get hold of where they want inflation to begin to turn. But we aren't there yet, and that brings us back to the head fake that we talked about last week, where the market 2 weeks ago got ahead of itself. So she said, so we need to look for 3 consecutive downturns. She was asked then by Steve, will we see another September 75 basis point increase? And she said, I'm not sure.
And they're not. The odds makers have it at about 54% chance that it's going to be 50 basis points increase, and then I think 40-something percent chance of 75 basis points.
She said what they're looking for is the economy to cool, and they're beginning to see slight examples of it. And she used examples of housing. Now, we've talked about housing for the last 2 weeks, and that we've seen it as a warning sign, housing slowing down, because housing is one of the leading positive indicators, if it's going strong, that the economy is strong, but it's beginning to
Mortgage
slow
activity down 21% year over year, and the median price, which had to come down, but dropped over the last 2 months 17%.
She cited airfares. Airfares are beginning to come down, and she cited car rentals. But she said, by no means are we there where we think we should be. And she was asked by Steve Leisman, where do you want us to be? And a very quick answer is, we want the nominal rate to be at 2.5%. Now, if we're at 8.5% and we need to get 2.5%,
a long goal.
We got a long way to go, and we have some rough waters ahead of us. I found it to be one of the most refreshing, straightforward, and it matches where we think we should be with your money at this point in time.
Yes.
So the very reasons.
And we're being safer than normal. As you guys all know, we've had more cash than we normally have, and then we've converted a lot of that into treasury bills and into 1 year or a little bit longer corporate individual bonds that are investment grade. So it's a different type of portfolios right now, but we feel it's a good place to just sort of hide out for right now.
What we've seen those portfolios do for us when the market has been up, we're seeing positive growth within the portfolios. And when we had adverse dropping in the portfolios or values, our portfolios do come down, but they are not coming down anywhere near where the market is from that. So we're creating stability, risk management, and we're creating opportunity, and money's working. But we have on the sideline dry powder ready to go by, because Ron Barron this morning in another interview said in his opinion, June was the bottom of the market, and there are tremendous buys out there right now, and we would be in agreement.
I would agree that there are tremendous buys out there. I don't think it's the bottom of the market. I would disagree with that.
Remember, September, October, we've said have always been really, really tough months. So we're going to wait a little bit and see what happens, and maybe we'll find a little bit better buying opportunity. And in my way, I like to say, we'll go down that K&W line for you, and we'll see what we can find that would be positive for your portfolio.
Because it is your money.
And your money matters.
That's right.
See you next week.